Hi there, I'm Angie Austin with Oil and Gas 360, and we are here at Intercom's 2019 Oil and Gas Conference in Denver, Colorado. And we are joined by Marty Thalken, and Marty is the chairman and CEO with Protégé Energy 3. Welcome, Marty.
Thank you.
All right, let's start off with just to give us an overview of Protégé 3, what Protégé Energy 3 is.
Oh, simply put, Protégé Energy 3 is a private E&P company whose investors are largely private equity and the management of the company. And so rather than being a public company where you have many investors, institutions, and so forth, we have effectively one partner who raises capital from Wall Street and their institutional investor base, and we invest together in growing and developing a profitable oil and gas company.
So in terms of how Protégé Energy 1 and 2 prepared Protégé Energy 3 for success, can you talk about how 1 and 2 helped 3?
Yeah, I would say it was an experience in learning about where to make money in this business. And I've been doing this company building process since 1992. And what I've learned is that it's not always in the same geographic location where you're going to create a successful company with good assets. And so you have to draw upon those experiences and look for opportunities where you can invest in oil and gas wells, drilling new wells, existing production, and other ways to enhance the value of the assets over time, and then ultimately create more valuable enterprise when you go to sell it to the next best owner, which normally is a larger company.
All right, so Marty, we're going to talk a little bit about the oil and gas industry going through some major changes due to, of course, the investors looking to generate predictable and sustainable returns. So what are some of the things that differentiate Protégé Energy 3 from other companies from an investment standpoint?
Well, there's a lot of talk these days and a lot of encouragement by the investment community to generate free cash flow. And we're fortunate in that regard in that we began distributing free cash to our investors in Q2 of this year. You see a lot of public companies describing their business models, and many are expecting to achieve a free cash flow position sometime this year, later this year, next year, possibly in 2021. Well, we're there. And how did we get there? Well, it was acquiring assets, good assets at a good time in the commodity price cycle. It was taking the time to do the science and study the rocks. We drilled some initial vertical holes to get core data and get good log information. And we took that information to develop a plan for development of the assets. And so it was methodical, it was data gathering, it was study, it was science. And then once we felt comfortable with the understanding of the rocks, we began a development program. And during the development program, we tested new ideas, new concepts relative to what was done in the past on these assets. We became more, we optimized completions, we optimized landing zones within the reservoir, we optimized well spacing, and we've done many of the same things that others have done. In our case, we've been able to enhance the productivity of the wells in one area by close to 100% over the previous operator.
Wow.
And in the other area, 50% over the previous wells.
Impressive.
So, that's actually been better than we expected.
Must have been pretty satisfying.
Well, it creates good profitability, and that's the overall objective. The reason we exist is to invest other people's money, so to speak, plus some of our own, and return that money to those investors at some point in time with a good, solid rate of return. And that's what we're about.
And the research and all the things you mentioned enabled you to do what I guess a previous company wasn't able to do with the same efficiency.
Well, we acquired these assets from a larger publicly traded company, and their focus changed to a different geographic area where they thought they could invest their capital in a more efficient manner. And so for us, it was an opportunity where we thought, if you talk about a decent analogy, we felt where they were was maybe in the third inning of a 9-inning baseball game.
Right.
And that there was a lot of time left in the game
Yeah.
to find new ideas, apply those ideas to the asset, create better wells, and improve the overall economics and profitability. And today we're probably one of the most profitable E&P companies in the industry. Our current return on capital employed is around 35%.
That's exciting.
Yeah, we're very pleased, and we hope we can continue that.
Yeah, I'll bet. All right, let's talk a little bit, Marty, about how Protégé has positioned itself for this predictable and sustainable return to the shareholders. You've kind of given a lot of info on like the research and thought you put into doing what you've done. So kind of expand on that and where you want to be in the next year as well.
Yeah, I think for us, it was 2.5 years of study and implementing ideas, testing some new concepts.
You took your time.
We did. We took our time, and we increased production in 2.5 years by, on average, 43% per year. And so it's a fairly significant increase in production. And we got our production to a point where we've transitioned to being a dividend or a distribution model company where each quarter we plan to make distributions to our investors, return some of that free cash, or actually the majority of the free cash, to our investors. And that's a good position to be in these days. There are quite a few companies out there that are expecting to be in that position 6 months, 12 months, 18 months from now. We're there, and we plan to stay there. We're taking risk out of our business. We're hedging so that we can secure those distributions. And we have a fantastic team of people working together. It's a small company. We only have 21 or so employees in the office, 15 in the field. And, so we're relatively small, but over the next 5 years, we're going to return between $75 and $100 million a year of free cash to our investors.
That's wonderful. Now, in terms of the Intercom conference, what do you get out of this? Do you make a lot of connections? Do you like the meetings, the presentations?
This is my first time attending, and it is a very well-attended conference.
Yeah, it is.
I've enjoyed the presentations. Oil prices are very volatile right now, and I think volatility creates a lot of anxiety for people in our business. And how do you deal with anxiety? Well, to me, you focus on the things you can control, and we can control how we implement our ideas and how we drill wells, how we complete wells, the timing of spending money. And then we can also control whether or not we take commodity price risk out of the equation, which we've done. And therefore, that could normally be described as being outside of our control. It's the risk of that has been taken away for the most part. You can't take it all away.
Right. Well, it sounds like you've got a pretty exciting year in front of you then.
I think the rest of this year will be interesting, and I think as we head into next year, the way we operate, it's going to be very much where are oil prices. Do we want to continue to grow? We've transitioned again to more of a dividend or distribution model, so we plan to grow 10 to 12% a year, and we can do that for 10 years very comfortably and provide a significant yield to our investors and at the same time increase the value of the equity. So I'm excited about the future. Our team is very excited about being a part of Protégé, and we'll just see how it goes.
Looking forward to speaking with you next year to see how it went and if you made any connections here that helped the company move along. And congratulations on your success.
Thank you very much.
All right. Angie Austin for Oil and Gas 360 and Marty Thalken, thank you so much for the interview.
Thank you.